Welcome to Pro News. Let's look at the latest financial market updates. The dollar added about 0.5% to a basket of the world's most popular currencies, pausing in the 103 area on the DXY index, near two-month highs. A reassessment of key rate expectations supported dollar purchases. In a fortnight, the priority scenario has changed dramatically, from a second consecutive 50-point cut to a 25-point cut, and even with some chance of policy remains unchanged. However, the focus is shifting to employment. The jump in weekly jobless claims has strengthened the position of those betting on the Fed's soft tone. Globally, dovish sentiment among developed country central banks is intensifying. The Reserve Bank of New Zealand cut rates by 50 points. ECB and Bank of England officials are hinting at a willingness to accelerate policy easing, and Japan has spoken of the irrelevance of further hikes. In the oil market, geopolitics warmed prices to $78 a barrel for WTI and $81 for Brent, but a sell-off followed. Oil closes the week near initial levels, suggesting that bears continue to control the market. Technically, the Brent price touched the 50-week moving average, but did not exceed it. It failed to reach the 200-week moving average at $82.5. This points to the potential for further declines and a possible new attempt to fall below $70 a barrel. Iran has threatened war on all involved if the country's oil facilities are attacked. The U.S. is making diplomatic efforts to reduce the risks to oil. In parallel, U.S. crude oil inventories are rising, and production has peaked at 13.4 million barrels per day. Hurricane Milton has been weaker than forecast, which has also had the effect of reassessing the risk premium in the price of oil. The cryptocurrency market continues to follow the downtrend that started back in March. Touching the upper end of the range in late September at $66,000 led to a sell-off. The second wave of the sell-off occurred last week, when Bitcoin fell below $59,000 late in the day on Thursday. It is expected to test the lower boundary near $52,000 by the end of the month. Gold continues its corrective pullback for the second week in a row, dropping to $2,600 per troy ounce, about $50 below levels at the start of the week. The change in sentiment coincided with increased buying in the U.S. equity market. If risk appetite continues, gold could return to all-time highs, as could the S&P 500. However, it is worth bearing in mind that gold has risen by 30% since the start of the year, which could deplete the bulls. Since October last year, gold is up 45%, which could trigger a multi-week correction. Inflation data from major economies are expected to be released in the new week. The focus will be on Canada on Tuesday, New Zealand and the UK on Wednesday, and Japan on Friday. The central events of the week are the ECB key rate decisions and the US retail sales report. Both events will take place on Thursday, which promises increased market tension by the start of US trading. Expectations of an ECB key rate cut have strengthened after recent comments from its representatives. This would be the third 25-point cut this cycle, an acceleration from previous expectations. Lagarde's soft tone at the press conference could reinforce the euro sell-off. We are also keeping an eye on Fed officials' comments. Traders need to understand how the tone of their remarks will change in the backdrop of strong labor market data and higher inflation. The main driver will be rate expectations for November and December. Will it be two 25-point rate cuts or one? Or will a 50-point cut in November remain on the table? Stay tuned to Pro News for updates. Don't forget to like, share, and subscribe.